Hi, this is Jeffrey Kurt Financial Group. Today is July 16, 2025. So let's start with the inflation data from the past couple of days. This morning, we got the PPI, Producer Price Index, which attempts to measure the pricing at the manufacturing level. And it came in a little lower than expected, so mildly good news. Yesterday we got the CPI, the Consumer Price Index, which measures prices at the retail level that consumers pay, and that was a little bit stronger than expected, and not out of line, but mildly a little bit higher than forecast and higher year over year. I think the net of this is that there'll be no interest rate movement at the July 30th meeting is coming up. So, that's, I think, off the table. We'll see if there's something's changed in the next, couple of weeks. But that is, the Fed's in the news a lot with the spat with Trump and all of the pressure to try to, lower rates. Now, next, I want to cover, some of the valuation of the stock market currently. And first of all, just as a caveat, that valuations don't always move markets in the short term, and especially in the current market environment where algorithms and passive investing and all these other mechanisms kind of drive the market in the short term. But valuations at some point, I do think, still matter, and if a trend breaks, maybe it could come in. So first of all, by the one measurement of the PE to peak earnings. So it's the price in the numerator and peak operating earnings in the denominator. And we got a chart here, just shows you that it's a very expensive market and stock valuations are very high. And again, it matters because you always want to pay lower on a valuation. For every dollar of earnings, you want to pay $5 rather than $10 for that dollar of earnings, if you want to think of it that way. But so when you use $10, the PE for $1 of earnings would be 10. 5, it would be 5, and that number kind of does have an impact in the markets over time. So here's that one chart again with the price to the peak operating earnings, and you can see how it's much higher and has gone quite a bit higher recently. So the other thing I want to point out is that this market is more expensive than even the dotcom boom. And here's a graph and chart that shows the top 10 of PE of the S&P 500. That's the green line, and then the blue line, and the darker blue line is the S&P minus the top 10, and then the other light blue line is the S&P 500. And you can compare these to the various measurements over time, and you can see that we're at a point close to the 2020 level, if not higher, and we are above the dot-com bubble in 2000. And so what's this all mean? It just points to that this is a risky market, and that if the trend breaks, valuations aren't going to be there to be supportive. And nothing predicting there's going to be a break of trend, but again, I want to point out that the risks are there concerning where the stock prices are versus some of the fundamentals. Thank you for listening. Please, I hope this is helpful. Please like, subscribe, and share. Send me any questions, comments, suggestions. Thank you again. We'll be back on Friday. Goodbye.